Listen up. I'm about to change the way you think about investing forever. I'm Kevin O'Leary, and I didn't build my wealth by following the crowd. I built it by knowing when to strike, understanding value when everyone's panicking, and having the guts to put my money where my mouth is. Today, I'm revealing the 2 stocks I'd buy right now without hesitation. Not tomorrow, not next month, today. But first, if you're serious about building real wealth, if you want to think like an actual investor and not some amateur gambling with their 401k, subscribe to this channel right now. Hit that button, because what I'm sharing isn't some get-rich-quick garbage. This is real money, real strategy, real results. And I need to know you're serious. Now here's the truth. We're living in one of the most interesting economic environments I've seen in 40 years of investing. Everyone's running around terrified about inflation, interest rates, recession, because while everyone else freezes in fear, that's when guys like me make money. Fear is the best friend of the disciplined investor. Most people don't understand what investing actually is. They think it's gambling, they think it's luck. But let me tell you something, luck has nothing to do with it. Investing is about understanding value, finding companies that print cash, have competitive moats, and have management teams that execute. And most importantly, buying them when they're on sale, not when everyone's excited. I've been on Shark Tank for years. I've evaluated thousands of businesses. I know what separates winners from losers. The 2 stocks I'm giving you today have everything I look for: moats, cash flow, dividends, and smart capital allocation. These aren't speculative plays. These aren't tech startups that'll change the world, but have never made a dollar of profit. These are real businesses with real earnings. Let me ask you something. When's the last time you actually looked at a balance sheet, calculated a PE ratio, thought about dividend yield and compounding? Most people never do this. They buy whatever Jim Cramer screams about or follow some guy on Twitter living in his mom's basement. That's not investing, that's noise. Here's my investment philosophy. In one sentence, I'm a dividend guy. I love cash flow. I love getting paid while I wait for stock appreciation. You know why? Because dividends are real. You can't fake them. A company paying dividends has actual cash coming through the door. They can't show you fancy charts about future growth. They have to write you a check every quarter. When the market drops 20%, and trust me it will, you're still collecting those dividend checks. And if you're smart, you're reinvesting them and buying more shares when everything's on sale. That's how you build real wealth. That's the power of compounding, the 8th wonder of the world. So what am I looking for in these stocks? Number 1, pricing power. Companies that can raise prices without losing customers. Number 2, strong balance sheets, low debt, plenty of cash. Number 3, competitive moats. Something that makes it nearly impossible for competitors to steal market share. Number 4, reasonable valuations. I don't care how great the company is. If I'm paying 50 times earnings, I'm getting crushed. These principles have guided me for decades. These principles made me wealthy. And these are the principles behind my 2 picks today. But understand this, these aren't for day traders checking their portfolio every 5 minutes. These are long-term holdings. You buy them and hold for years because that's how real wealth is built. Not by trading in and out, but by owning great businesses through the noise. The first stock I'd buy without hesitation is in energy infrastructure. Before you yawn thinking it's some boring utility, let me explain why this is one of the smartest plays right now. This company operates pipelines, storage facilities, and terminals moving oil, natural gas, and energy products across North America. Here's the beautiful part. They don't care if oil prices go up or down. They get paid on volume. They're basically a toll booth on the energy highway. Think about it. Every single day, no matter what's happening in the world, no matter what politicians say about green energy, people still need to heat their homes, factories still need natural gas, trucks still need diesel, and all of that energy has to get from point A to point B. This company owns the infrastructure, making it possible. And you can't just build a new pipeline overnight. The regulatory environment makes it almost impossible. Massive competitive moat. First, the cash flow is incredibly predictable. Long-term contracts, often 20, 30 years. Locked-in revenues. Management knows exactly what's coming in next quarter, next year, 5 years from now. That predictability lets them pay a fat dividend and grow it over time. Current dividend yield, over 6%. Show me a savings account paying 6%. You can't find it. And this isn't some risky dividend getting cut tomorrow. This company has paid consistently for decades. Second, the valuation is cheap. Everyone's obsessed with AI and tech stocks, completely ignoring infrastructure companies. You're getting a quality business at a bargain price. That's when you back up the truck and buy. What do I do with a stock like this? I buy it, I hold it, I collect the dividend, I reinvest into more shares, I let time do the work. Over 5 years, 10 years, you're not just getting stock appreciation, you're accumulating more shares through dividend reinvestment. Your income stream grows larger and larger. This is generational wealth. Now someone's going to say, Kevin, what about renewable energy, electric vehicles? Won't pipelines become obsolete? Show me the numbers. Yes, we're moving toward cleaner energy, but that transition takes decades, not years. Natural gas is cleaner than coal and critical for that transition. Even if we electrify every vehicle tomorrow, which we won't, we still need massive energy to generate that electricity. Here's what most people miss as we build more renewable energy. We need more natural gas plants for backup power. When the wind isn't blowing and sun isn't shining, you need natural gas. It becomes more important in a renewable future, not less. This company isn't sitting still either. They're investing in new infrastructure, expanding operations, positioning for whatever the future energy landscape looks like. Good management adapts. Over the past decade, they've generated consistent free cash flow, returned billions through dividends and buybacks, maintained manageable debt with investment-grade ratings. This is a blue-chip infrastructure company trading at a discount because Wall Street's ignoring it. When the market wakes up and realizes what a great business this is, this stock will re-rate higher. You'll get appreciation on top of that 6% dividend. That's the double benefit of buying quality when it's out of favor. If this makes sense, hit that like button right now. Leave a comment telling me if you agree or think I'm crazy. And if you haven't subscribed, what are you waiting for? The second stock is in healthcare, not some biotech gambling on clinical trials, not a hospital chain at the mercy of government rates. I'm talking about a company positioned for one of the most powerful trends of our lifetime, the aging population. Here's a fact most people ignore. Every single day, thousands of baby boomers turn 65. The largest generation in history is getting older. As people age, they need more healthcare, more drugs, more devices, more services. This isn't reversing, this is demographics, and demographics are destiny. This company operates in a specific healthcare niche, providing essential products used across the entire system. Hospitals need them, clinics need them, doctors need them, patients need them. Here's the key. These products aren't optional. When you go in for surgery, the hospital has to use them. It's standard of care. This creates incredible pricing power. When your products are essential, when switching costs are high, when quality matters more than price, you maintain strong margins and protect profitability even in tough times. People might delay buying a new car in a recession, but they don't delay medical care when they need it. The financials? Massive free cash flow, excellent return on invested capital, strong balance sheet. They've returned cash through dividends and buybacks for years. Dividend yield around 3%, solid and growing consistently. This isn't a 6% yielder, but that's because the market recognizes the growth potential. You're getting income and growth. You get paid a dividend while the business compounds because the drivers are so strong. An aging population means more procedures, treatments, demand. This isn't speculation, this is math. The competitive advantages. First, decades of relationships with healthcare providers. They're not just a vendor, they're a trusted partner. When dealing with life and death, reliability matters more than saving a few bucks. Hospitals won't switch suppliers to save 5% if it risks patient outcomes. That stickiness is a massive moat. Second, scale advantages. They're one of the largest players. Better supplier deals, more R&D investment, lower fixed costs. Smaller competitors can't match that efficiency. Third, diverse product portfolio. Multiple revenue streams across different healthcare areas. One segment has a tough quarter, others pick up the slack. That stability allows consistent dividends. Is this stock cheap? Not really, it's fairly valued. And I'm okay with that because sometimes you pay a fair price for a great business. I'd rather own a fantastic company at a fair price than a mediocre one cheap. Quality matters. Quality compounds. The biggest mistakes I've made weren't overpaying slightly for great businesses. They were buying junk because it looked cheap. Cheap stocks are cheap for a reason. Weak management, dying models. This healthcare company is premium with a bright future. In 5-10 years, this company will be worth significantly more. The growth trajectory is clear. The demographic trends are undeniable. Management has proven they execute. Here's what I'm doing personally, building positions in both stocks. The energy infrastructure gives me high yield and stability. The healthcare gives me growth and exposure to unstoppable demographic trends. Together, they create a portfolio that pays me today while positioning me for tomorrow. That's smart investing. That's how you build real wealth while everyone else chases the next meme stock. So there you have it. 2 stocks, 2 massive opportunities, real businesses, real cash flow, real dividends, not speculation investing. If you're serious about this, subscribe right now. Join this community of real investors, leave a comment, hit that like button, and most importantly, take action. Because while everyone else is paralyzed by fear, we're making money. I'm Kevin O'Leary, and I'll see you in the next one.